Good evening, everybody. It's Jeff Scott. It is March 5th. It is, as you can see in the lower right-hand corner, it's about 10:54 at night. Yes, the futures are out. They're all there, mildly down, modestly down, mildly down. And we'll take a look at them later. I titled today Rates Rise, Breath Narrows. The markets have held their numbers. They've moved up further, but the participation seems to be diminishing, probably shows that we're getting close to a top. We'll talk about that as we go. Big news this week will be the unemployment report on Friday. Usually comes out the first Friday, but apparently not the first Friday when there's only 28 days in the prior month. And I think there's some Fed speak early, then we'll get the quiet zone for the Fed speak. And next week we'll have some news on rates where I think a lot of folks are pricing in an increase. This is for education purposes only. Anything I recommend in the spirit of education should not be considered investment advice. I'm a doctor, not a broker. I am not certified, registered, or qualified to manage your money. Therefore, you make your own decisions. I'm independent. I don't get paid to talk about anybody's software. All the programs that are tools that I use, I pay for myself. And trading involves risk, and you alone are solely responsible for any decisions that you make. To me, it's all about education, and I really look at my education as sort of being a blend of two worlds. It started with Cancelim, as taught by O'Neill, improved by Morales and Katcher, taken to the computer with highgrowthstock.com by Ian Woodward and Ron Brown, and then really learning how to actually trade, not just find the stocks to trade, but how to manage money, when to pull the trade, when to close the trade. Really, I learned so much from John Person here, trader, mentor, teacher, author, great software tools, and become a friend. Dan Tharp for position size and money management, and that's my buddy George Lee. George and I will be speaking in Orange County. It's the 25th, 26th, 27th, or thereabouts in March, Saturday, Sunday, and Monday, about a month from now, or actually less than a month from now. What I need on my desert isle, I have lots of programs, but I really only need a couple. I need TradeStation and or Thinkorswim. Genesis is a wonderful charting program. It's expensive, and I don't go to it often on these programs because most of you don't have it. Hgsi is my key for end of market or delayed intermarket review. EdgeRater is a great tool as well. And then I use a few seasonality programs and some websites. Here is the website for highgrowthstock.com. I pointed out not because I get commissions, I get nothing if you buy it, but satisfaction that another user joins the family. Two things to point out: free 30-day trial, no credit card necessary. And you go up to investment strategies or investing strategies, you'll see my name and Ron Brown. We both have a plethora of webinars on how to use software as well as how to trade. Stock patterns are cyclical. We seem to be living up here where, we feel toppy, and every time I think we're going to top, we go higher, and that's very important to point out. It ain't over till it's over. Yes, breadth is diminishing. Yes, divergences are popping into the market to the negative side, but we still seem to go higher. And I should also point out that seasonality-wise, this is a strong time of the year. And again, you have to know where you are in the market. This is not the time, I think, to be loading the boat. That was about 3 weeks ago, 4 weeks ago, when I did one of these programs and I talked about the entire market was pulling back to support and had momentum come in, my favorite setup. I'm certainly thinking more probably midway between these two, where I have sold some premium far out of the money. I have raised some cash, but I'm still net long. If I look at the marketplace, I added the NASDAQ 100, and you could see that pretty much every sector was 50-50. You think about this week, the first 2 days, I could just tell you about my portfolio. I made a lot on Monday, gave back half of it on Tuesday. Wednesday was unbelievable, gave back half of it on Thursday, and Friday was up again. So you had some really big move days up and then some days down. Net, it was an up week for me, and I think for most of you. But you can see even on Friday, you see half the market's green, half the market's red. I think an excellent representation that there is some challenge with representation here. If I look at Thinkorswim, and remember the first one's E-minis, second is NQ, so NASDAQ 100 futures. Third is the YM, the Dow. Whoops. The fourth is the TF, the Russell futures, VIX futures, and the dollar. What do I see on the daily? I see that Wednesday, that big up day across the board, pullback on Thursday, and on Friday, small up day. So that pattern is the same on the E-minis, the NASDAQ, and the Dow. The Russell didn't have much of a bounce on Friday and a little bit deeper pullback on Thursday, so probably the least healthy, but still above its 50-day moving average, closing right under the 17. The VIX continues to be weak, and the dollar tried to make a move, fell back and tested support at the 50. It'd be interesting to see what it does this week. On the weekly, for those that don't think the market is strong, you take a look, and all three of the ones on top, the ES, NQs, and the YMs are at weekly highs, although they off the high of the week. And you could see clearly that the Russell futures are weaker. Again, the dollar and the VIX have been weak for a while. And then one last time looking at the same thing. Here we have three rows. The first row horizontally is the daily, then the weekly, then the monthly. And from a column perspective, we have the E-minis, we have the NQs, the TFs, the NYSE, and the YMs. And you could see that we're in a buy mode across, except we went into a daily sell on the Russell. Weekly are buy modes and monthly are buy modes. So Russell's showing a little bit of weakness. Now let's take a look at things that may affect the market. I heard a lot about how rates were higher, and clearly both the 10-year on the left and the 30-year on the right on a weekly charts drifted higher, but they're still below the sweet spot. I kind of figure that this area here between 2.5% and 3%, give or take, is a place where as long as rates don't go beyond that, I think that the market can still go higher. And you could see we're at the lower end of the range. Yes, we were up a little bit on the week, but really not much at all. AD lines are both on the small and the large stocks, or small, mid, and large stocks are near their highs. Doesn't look like this market has rolled over from that perspective. From a breadth perspective, the number of stocks below the 200 and above the 200 and above the 40-day moving average dropped back for the week, but are still in the upper third of their range. Sorry about that. Allergy season. Clearly have fall back some, but are not at a point where you signal distress or imminent reversal. This is the 3-month or 13-week new high, new low ratio. Some of these black charts come out of Warden. There's actually a lot of neat things you could do with the current version of TC2000. So I've been using that quite a bit as well, especially intraday. I've been able to reproduce a lot of my indicators in that, and it is fast and it is real time, much faster than even TradeStation. The purpose of this slide is simple. When the number of new highs to new lows reaches about 95% at a 13-week time frame, the market almost always pulls back, or at most goes sideways. And if we go back 2 weeks ago, we were getting to that point. We are down in the bottom third. So frankly, we're closer to a bottom on this picture than we are in a top. And when we get down here is when we start to see reversals to the upside. So I call this neutral, but on the lower side of neutral. The McClellan on both the daily and the weekly show the same thing, despite seeing higher highs in the market. We have a clear-cut divergence where we haven't broken the midline on the oscillator or the summation index on the McClellan daily or weekly, a couple of shots across the bow. The bucket still bullish, where we have almost 60% of the stocks above the midline or their Bollinger Bands in the S&P 1500. And you can see from a bucket perspective, we don't have a preponderance of stocks either below or above their Bollinger Bands. This is the date of the analysis, which is Friday. This is the date of the list being put together. Hindi free zone, I'm looking at Hindis, or a series of Hindis would tell me time to go to cash. These have been very helpful in the past. We actually fired 3 of the 4 signals on Friday, but you need to have a lot of new highs and new lows, and we just didn't have many new highs and new lows, so we didn't have the 2.2% minimum. So we've had no new lows for quite some time, and after this week, we didn't have a whole lot of new highs. So we didn't make it on either the NYSE, which would be the classic determinant, nor on the Russell 3000, which I look for as well. From a market tone, we clearly threw some more yellows here. I think this is the U.S. markets. Still mostly bullish. Again, red is good, and we're looking at the third series here. Red is bearish, green is bullish, yellow is chop. We'll see if we're going into chop. And from a sector strength, it's continuing to do well. I guess improved probably should have come off, because now we've got materials, discretionary, and energy have gone to yellow. We have nothing in the red. So still, again, the preponderance of bullish signals, not bearish. The canaries are wedging. They're pulled back to the 17-day moving average and had a doji. Remember, the canaries are the large NASDAQ 100 stocks that we build an index for, to use this as a vehicle to give us a clue as to before the market rolls over. So think about Apple, Amazon, Priceline. Used to be LinkedIn. I put in Baidu, my mistake. Netflix are among the components of the canaries. News and EPS dates. The big news of the week, I think, is going to be the employment numbers on Friday. There's a little bit of Fred speak in the beginning, but apparently, just like companies, they have a quiet zone around their meetings and their announcements, so you won't be hearing much for the Fed after Monday. There are many more earnings. I put some that I follow up here, and more importantly, the comment, it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. My thoughts: market gyrates as volatility remains low, rates rise on speculation of an increase. Fed awaits monthly unemployment numbers, and then we await a rate hike announcement. Dollar sold off some Friday, but likely to strengthen further in light of increasing economic pressure and potential of rising rates. Leading groups narrow as breadth contracts, and markets being led by biotech, semi-financials, and a little bit of housing or home building. Usual agenda for a top-down analysis, and now let's go on to the charts. So systematically, I like to always go into TradeStation and do my 5-point list. My 5-point list looks at major markets, and we look at 5 different signals, and I kind of look at the preponderance of whether it's bullish or bearish. So I've got the E-mini futures. You can see they're down 8 points on absolute value. Let's see why that didn't go. Hold on a sec. Want that to be blue. There we go. So hit E-minis. And I'll get there eventually. It's probably the other blue. All right. Here we go. All right, so first point. They get a point here in the daily because it's in a up move, up on the weekly, up on the monthly, although you can't see it's been up in the monthly for some time. The next thing to look at, there it is the color of the paint bar. Red tells you that it is not okay to go long. Green is it's okay to go long or short. Not to go green, okay to go long or hold. You shouldn't go short. And when it is blue, I believe, I'm having a mental block here, when it's neither red nor green and it's blue, as you can see here, it tells you that there's no signal and you could go long, short, or hold. So I got a red bar here. I've got a green bar on the weekly and a green bar on the monthly. So for the most part of the first 2 points, I'm predominantly bullish. Then I look at where we are within the auto envelope, and for some reason I don't see my envelopes. Let's see if I can't find what happened to it. Elder. Huh, that's interesting. Let's see if it's over on this one. Because I'm looking at the wrong one. Here we go. Blue, okay, here's it's at the top of the envelope, but it's within it. It's outside the envelope on the weekly, so that's a little concerning. The fourth thing is I look for these red dots. Green dots would be bullish underneath, showing bullish divergence or convergence, as John calls it. Red dots are bearish, so I got the red dots, and I'm at 89% of the high jump. So E-minis look like they are stretched and at risk here, but they're still in a buy signal, but I'm a little bit concerned about them. Same analysis to the NQs. Buy blue, buy green, upper part of the envelope, outside the envelope. Red dots here, so clearly overdone. And then 92%. So both the E-minis and the NQs look like they need a breather. When my stocks get up at the 92%, I look for them to pause. You can see that even though the high jump has been working for me for a long time, this market has kept getting higher and higher high jump numbers. Let's look at the Dow. Same old story, blue on a buy with the red dots at the upper end and outside the envelope at 90%. So Dow, NASDAQ, and E-minis are all stretched here. And then we should see some weakness perhaps on the Russell futures, and you could see they are red, blue, and blue. They're in a buy signal, however, at least on this program, we know that on Genesis they're actually in a sell signal. And notice that the high jump bars come down to 53%. So big stocks still look good, the small stocks look weak, and we look like we're tired. I see lots of evidence that says this market is getting to a point where I expect a sideways or a pullback. Problem is that's news driven. We haven't, it's not over till it's over. We felt the market was going to go down in the past and we were wrong. I do think that there's trouble I see in these pictures. Very quickly, let's look at the dollar. Dollar's in the middle of its range in a buy. You can see the 50% on the high jump. If we look at gold, we see a sell signal. It had some MACD divergence, broke down here, still in a weekly buy, although monthly sell as well. We look at oil, down 21 cents, and you can see it's been in a sell signal here in both the daily and the weekly with red bars. Certainly looks weak as well, which is kind of concerning because this is a strong season typically for energy. So once I've done that, I now like to go into Hgsi and open up, and let's look at major markets plus. And let's look at top-down view. And this gives me the major indexes or ETFs, all price and volume heavily weighted to 1 day, time greater than 5, greater than 3 weeks. Strength here, this is bullish, I guess. The transports are strong. And frankly, the Dow, the NYSE, the NASDAQ are all up here. On the downside, we got Russell, we got metals, we got volatility, we got the dollar and small caps. So you can see the small cap weakness. So very quickly, I'll look at the major indexes to get a sense of where I think this market is going. S&P 500 index. Let's go to this view here. So up top are the bongos. These are my long-term buy and sell signals. As long as the weekly buy signal is green, I'm a bit bullish. And you could see that we've been green since November. Gee, what a shocker on the 11th. So even right around the election, we went into a buy signal, and we remain in that today. These down here are kahunas. These are momentum signals that occur on the instrument I'm looking at. Down here are the phoenixes in red and the eurekas in green, which are the high growth stock version of a follow-through day. I always use the same moving averages, which is the 8-day exponential, then the 1750 and 200 simple. And up here are the Hindenburg omens, and you see we haven't had one in weeks, so we're not going to talk much about them today. So as we saw on the Thinkorswim, shots and the Genesis shots, we had little pullbacks in the major indices. Let's just give you an idea of what we've done. We had a great buy signal come in right here with Eurekas and Kahunas. A couple days later, even the Bongo switched to a long as we broke above the 50. But from the reversal day to the high in the market up here, high close on Wednesday, we were up 15% in about 3 months' time. Our pullback from the closing, let's just take it from the high of the day, our pullback to the low was 1%. So it's really difficult for me to get that excited about this short-term pullback in the market. This is still bullish, still looks like it's going higher. I have lots of concerns. I pointed out some on the divergence and the high jump that says this market is getting to the point where I would expect a reversal or a sideways move, but I'm going to wait for it before I start making changes because of it. I can look at the Dow, same exact pattern, not a whole lot to say. I can look at the NASDAQ, same basic pattern. I could look at NASDAQ BIOTECH, a little bit stronger, isn't it? It was in, I'm going to say it was in a bit of a trading range, and it may be breaking out, or if you are the pessimist among us, you would say it's at the top of its trading range and maybe it's going to come back in. Biotech certainly has been one of the stronger things in the market right now. What else do we want to look at? We could look at the looked at the Dow, the S&P, the NASDAQ. Want to see a little bit of weakness? We'll look at the Russell 2000. Really not that much weakness. Big move up, gone sideways. It looks to me like it's, whoops. Kind of closing right here now. You notice that this area has been support. Up here it was resistance. It's not unusual for support or resistance to turn into support and vice versa. I think this is an important line on the small stocks. Below that, we've got the 50-day moving average, and if we don't hold there, then I'd be more concerned. But right now, I'm going to see if I hold at those points. If I look at the dollar, you're going to see something that gave back at the end of the week. Had an island reversal perhaps, closing right on the 50. Will this support hold, and will the dollar bounce, or will that weekly bongo tell me that it's going lower? I think that really matters, because if you're a gold bug, then you know that you will make more money if the dollar goes down. And you could say you had a bit of a reversal day on Friday, but you were still down on the day, and you failed, not surprisingly, at what had been prior support, became resistance at the 200-day moving average, although your weekly bongo is green. If I look at silver, right in front of my face, I just don't see it. There's gold miners. Here it is. Silver broke back down below the 200, was actually a little bit stronger. And if you want to talk what the definition of weak is volatility. It's above where it usually bottoms, but it's kind of near as low as it gets. Now you could say it's going to go up, it's going to go up, volatility will go up. It does have spurts here every couple of months. This is usually followed by sharp pullbacks in the market, and once it starts to come back down, which is pretty quickly, you get rapid recoveries. You may think that to play this, you want to go out and buy the volatility. So you might look at things like the VXX. And I always like to point out the following. The VXX, yes, it looks cheap, but if I go into a monthly chart, do you really want to own something that, because of reverse splits, that's currently trading at $18, was as high as $30,000 within the last decade? it continuously goes one direction. If you're going to make money trading these instruments, you've got to be sitting at your computer. These are day trading instruments. Yes, I will at times play VXX, but I have found I can do better, frankly, by trading SVXY, and shorting it up here made me a little bit of money. But even that, these are difficult to play, and I just warn you that just because the VIX is falling does not mean you're going to get what you think out of the ETFs. You have to understand backwardation. You have to understand what they're measuring and how they're calculated. So my feeling right now is continues to be that the market is stretched at risk of sideways or pullback. Let's see what's working and what may not be working. So I like to go into industry groups. You see I start with 172, and let's look at the 2-day force down. So this are the ones that have got momentum to the downside. Not that many, only 9. Tells you right there about retail, mass merchants, specialty apparel, and department stores are weak. Utility networks and integrated utilities are weak. Home improvement, interesting, weak. Wealth management, weak. What's been working? 2-day up. This is just momentum, short-term momentum. 39 groups. I could tell you that's not a beefy number. Typically, in a strong market, I'll see 60, 70, 80 of the groups to the upside. Not a lot to the downside, just not a lot to the upside. You look up here, healthcare is a place to think about. Specialty pharma, biotech, large pharma, healthcare facilities. Those are in the top 4. If I go down here, I'll pick up life science equipment, healthcare services, healthcare supply chain, medical devices, medical equipment, managed care, and generic pharma. Does that tell you where the strength of the market is? Of course it does. Healthcare has been strong. Financials have been strong, both diversified banks and regional banks. If we see a rate increase, these are places that might benefit from that. Energy, for the most part, has been weak. Interestingly, here the integrated oils are near the top. I don't see services, and I don't see exploration up here. I do notice renewable energy and marine shipping. Casinos, auto and auto parts rounded off. So let's very quickly go through and see if there's anything. This is top-down investing at its best. You click on it, you right-click. These are the stocks in the group. I never look below the index. I own Nectar, I own Esperion, I own Cara, I own Procera. This is a group I'm heavily in. I know about some of these from my day job, but this has been a group that's strong. So let's quickly look at the group. Acorn had a big week, up 13%. I don't own it for the reason that it's really in the lower part of its pattern. Maybe it's a time to get into it. I'm going to add a couple of my favorite indicators. I'm adding here, I'll be looking for Bible gap ups, squeezes, and MOBOs. Here's the group index. Here are the pocket pivots. Here's a OBV, my kahunas, and then that's a Eureka and the Phoenix. So Acorn, big bounce this week after earnings came out. It's still below the 200. To me, it's in a downtrend. I'll pass. Here is I was fortunate to be in the stock off of here. If you listen to me, you know that I'm looking for stocks that break above their moving averages with momentum. Mobile breakout from a squeeze and a kahuna. The weekly long-term kahuna was positive. Now, the problem with this one was it wasn't in a great uptrend. In fact, it's been in a downtrend, although over the last several weeks it has picked up, and it is in an uptrend. So this stock had a nice gap up, then gave back some of it the same day, still holding above the open there. That here was a Bible gap up, and you could see it had a Bible gap up painted here. La Jolla Pharma had some good clinical trial data. It had a Bible gap up, and it held. Don't know much about them. Cara, I'm in as well. I wish I would have gotten in the first time I talked about it. Sorry, I got allergies. And the first time I would have talked about it, this would have been a great time, a market turnaround. a Kahuna, mobile breakout, Bible gap up, everything is green. The other place I like to get in is coming off the 50 with momentum, which is where I got into it. Nice big move here, Kira Therapeutics. Espiron, this was one that was a great thing here. Amgen got approval of a drug that will ultimately compete with an Espiron drug, and that caused the stock to go up because that approval validated the class. And you could see that all of a sudden volume came into this. The stock has moved from 13 to the low 30s. As you could see, it makes no money. It loses money. You could see the demand here is extremely high. I think a lot of people expect this stock to go 40, 50, or potentially even go back to where it was hyped at one point, up above 100. So this group is strong. I'm heavy into it, but I've got trailing stops and I won't stick around. Nectar, I have to get above the 200. Fold is another one that broke out this week. So a lot of action in the specialty pharma space. Next group, biotech, very closely related. Insight is one that I own. If you believe in buyouts and you believe that Gilead needs to make, and probably Sanofi need to buy something transformative, there's not a lot of choices there. The choices are Insight, the choices are Clovis, the choices are Tesaro, and then you drop down a little level, maybe Exelixis, are four companies, each of which I think are takeover candidates. I work with one or two of them, but I have absolutely no insight into any existing deals or non-deals. In fact, all of them will tell you they don't want to be taken over. But here's a stock. You see the earnings per share will turn around the second quarter. They do have revenue. They do have a commercially marketed product. They have an immune therapy drug. That's the exciting thing in development. That's different than the drugs that you see on TV. Big uptrend. I keep raising my stops, rolling my calls, selling calls above it out of the money, and I'll keep riding this as long as I can. Sarepta, I don't currently own right now, but I'm tempted. They make a drug for muscular dystrophy. They are now selling the product on the market. Didn't have a great earnings report, but they do get reimbursement by some payers. Notice pullback to support, lived on a support here. The yellow says it was in a squeeze, and it had a Bible gap up and a mobile breakout on Thursday and a Kahuna. You're buying it at a low risky point because you could probably put your stop right here and not be risking a lot of money. So Sarepta looks interesting here. Ionis, I don't know much about them except they had some good clinical trial data. They've had a nice move. I don't like the close on Friday. I'd probably pass. Notice that the weekly Kahuna, though, has turned green. Amgen, this is really, I think, portends well for biotech. When the big guys are starting to lead again, it's a good sign. And Amgen has historically been a great leader, and then it suffered for a long time and has gone sideways really for the better part of 3 years. And it's at a point now where it's breaking out above the high of that sideways move. Amgen has always been a leader. And again, if the leaders start to lead, that says good things. And notice how, had you played with some of my rules, took the pocket pivots, perhaps the Kahuna breaking above the 50 and the mobile breakout, waited to the bongo turn green, you'd still be in the stock and you would have had a nice move up. Of course, I didn't take the trade. I like the smaller ones. Here's Exelixis, one of the other potential takeover candidates. What a beautiful lower left, upper right leading. And it still had a mobile breakout, a PSAR reversal, and a Kahuna on Friday. Biogen IDEC is another big leader in this group. And you can see that Biogen IDEC is at the upper part of its channel. It'd be nice to see it break above. Sorry about that. I had to step away for a second. My dog needed a late night potty break. So I was just going to say that Biogen, like Amgen, sideways for a long time. A breakout here, again, would be very positive for the industry group. And notice the industry group strength here on the group rank or group what would the word? It's the industry group plotted. You can see it's breaking out as well. Don't know this guy. It's a little stock. I don't buy them when they're that low down there. Here's another one. I don't know, a derm company breaking out. Lexion has had some issues at the top. Turnover and leadership has been a great growth story. Let's just imagine if you bought this 5 years ago, what you would think today. This is why these stocks are exciting, from 40 to 200. Back down to 130, but what a great stock with lots of splits along the way. So BIOTECH, I showed you a number of stocks that look pretty good. Let me go one more. I'll go to the next couple. Celgene, like Amgen, like Biogen, looks in a position that, does this break out from here? Here's Clovis, one that I think is a takeout candidate, pull back some. And BioCryst, also breaking out here. So a lot to like in biotech. Diversified banks. Boy, will these things fly if they raise rates. Probably going to fly anyways because the regulatory. This is Bank of America. This has gone from down here in June at 12 to 25 and poised to go higher. Great growth rate, small dividend, and we'll see what happens when Jumpin' Janet raises rate. This pattern of move sideways, you'll see these in all the big banks. Here's JP Morgan, same pattern, higher price. Here's Citigroup, same pattern, and so on and so forth. The regional banks may benefit even more if there's a rate increase. They all will probably benefit if they reduce regulation. Surprised to see integrated oils here. Let's see if there's anything that looks interesting. Petrobras sort of basing, not too exciting to me here. It was up 2% on Friday with a lot of volume. That's why it's on the top. Chevron pays a 3.8% dividend. Total, at least breaking above the 50, 4.3% dividend. Royal Dutch Shell, down in its pattern, 6% dividend. So I think these are dividend stories, and boy, they don't look nearly as good, I believe, as the financials or the banks. Casinos, Macau, gambling revenues increasing, therefore casinos increasing. You can see 13% return for one of them there. Scientific Games, I thought they make, maybe I'm wrong, I thought they make the equipment. What a beautiful pattern. It's already had a huge move. This was the time to have gone long, or maybe here. Kahuna's broke above the 50, has not broken below the 50. It's getting extended in my book. And what do they do? Oh, lottery machines. Okay. Well, that's a leading stock if I've ever seen one, getting extended, although it just broke out on Friday with a Kahuna pocket pivot out of a squeeze. That looks kind of interesting. Wynn Resorts, sort of in a training range here, but I suspect this will go higher with Macau. El Dorado is the one that broke out here. Earnings are up and down. So you might want to look at casinos. Automobile index. I don't really look at most of these as growth except for Tesla. Here's GM though, a nice move off the lows of 27 up to 38. Breaking out above the 50. Everything is green. I don't like the earnings per share growth, but it does pay a 4% dividend. Tesla pull back sharply down to the 50. Maybe this will turn into be support. Don't like the earnings. Still lots of demand in this name. Fiat Chrysler going sideways, looking for a reason to go higher. I only look at the top couple, especially as we get later. Large pharma. Merck, a leader in the immuno-oncology space with BMS. Looks to me like you want to see, again, another leading stock. Probably, let's see if it's all-time highs. Well, going back 15 years, we're at all-time highs on Merck. I can't say if it was higher in the distant past. Nice 45-degree uptrend. Everything looks good. Starting to get extended. Pays a 2.8% dividend. Doesn't have great earnings per share growth. BMS, not nearly as pretty. Some talk about an acquisition candidate. They've had some trial issues. 2.7% dividend. AbbVie breaking above the 200, multiple pocket pivots and kahunas. That always interests me. Mobile breakout from a squeeze. Lots of green there. It does have some earnings per share and has a 4% dividend. I always look at AbbVie as an R&D, a lot like a biotech, and a dividend like a big pharma. AstraZeneca doesn't want to give me a print. There it is. Trying to break above the 200. I mean, the first couple of groups, the first three look good. The rest of these, healthcare facilities, tenant healthcare, failed at the 200. I'd like to see it get above before I touch it. Community health systems, here's a stock that would be a bottom fish, but it does have some earnings coming in, some demand, broke above the 200. Hca has a pattern like Merck, lower left, upper right, at least over since the beginning of the year. Nice 45-degree angle. It wants to go higher. This is what I do. Every night I take my top 10 groups and I look to see if there's anything that's interesting. Priceline had blowout earnings. You now see estimates up to $1,900. Looks like the market stalled on the end of the week, probably goes higher. Bit Auto, I think this is more of a website thing in China. And you can see it's sort of low in the pattern, but look at the volume coming in, a kahuna, some pocket pivots, everything turned green. That might be one to watch. And Trade Desk is an IPO in this space that looks like it wants to go higher. And then lastly, the 10th group is airlines. Those who have watched me for any length of time, I don't always sneeze, blow my nose, and have the sniffles like this. It's allergy time down here. But I love uptrends, sideways, and then breakout on momentum. We don't have much of the breakout here, but we did have a pocket pivot and a kahuna come in. Everything is green. Certainly something that I will be watching. This is United Continental. Similar pattern for American. Delta looks Southwest looks even better. This is the one that Warren Buffett even said that he might consider buying, which led to another leg up. Frankly, probably a little bit riskier than the others. It's a little bit more extended. So that's the top 10 groups. And typically that's how I do my nightly analysis. I look at the market. I look at the number of leading groups to the upside and downside. And if I'm still long the market, which I am, then I look at the top 10 groups and I break down them. Now again, let me just say I get a lot of my indicators are telling me or suggesting to me that the market is going to be slowing down, maybe topping, but I will wait till the market changes its character before I make my moves, because I have a tendency of making my hedges and my changes, and then the market keeps going higher, and then I get frustrated. I know this has never happened to anybody else. I cover some of my shorts, and then what happens the next day? Market drops. So I'm going to wait for the market to drop before I change my posture. However, I will be raising cash, raising stops, taking profits, and so on and so forth. If I just come down here and I look at my buy list for the weekend, just give you an idea of the things that I will be watching Monday, and maybe look at a couple charts before we say goodbye. And let's just do it by industry group. And so some of the stocks that I mentioned that I own already, I didn't put them back on my list because I'm not going to buy them again. Others I will add to. So you could see right away, I've got two biotechs that were interested, Dynavax and Gilead. Gilead, this has been a laggard, but I want to watch Gilead, especially if it makes a transaction. It actually looked better on my trade station charts. I just watch these, and I'll show you what that means in a second. On the specialty pharma, I am looking at Acorn, so you can get above its 200, as well as Corcept, and I have a position in Esperion that I may add to. I think I need to not do these programs when I have my allergies, because I'm sure it sounds horrible on your end, and again, I apologize for that. Corcept is a stock that's coming out of a deep cup, has some earnings coming into the stock. I'm going to watch it and see if it can break out above this level here, and if it does, I might take a small position. Other things that popped out to me, Acalero had been a high-flying semiconductor stock that pulled back. Is it time to get back in? It broke above the 50, had some volume. I would say not yet. I want to see one of my momentum indicators fly, but I'm going to monitor that one. Infi had been a big leader in the semiconductor space. It pulled back. Is it done going down? I don't know. I'm going to watch it as the week goes on. And then the other one, AOI, this is what you want to own. And notice the pattern. Uptrend, sideways, a breakout with a kahuna, a mobile breakout and from a squeeze and a bobble gap up, followed the next day by a bongo weekly green and a nice run. Look at the earnings per share growth opportunity. I still like AAOI. Bank of America, I already pointed out to you. I don't usually make money on these educational services stocks, so I have to stop buying them. But is this not my favorite pattern? Breakout, uptrend, sideways, and a PSA reversal Friday, mobile breakout from a squeeze. Everything is green, and it had a kahuna. I'm going to be looking closely at DeVry and probably putting a buy stop above the high of the day. Let's take a look at what's left here. And on that note, I am going to, what do I want to do before I end? I guess that's probably it. All right. Oh, yeah. I did want to say one thing. I am speaking. Let me put it on pause, then I'm going to pull up the ad. All right. So I just wanted to let everybody know that I will be speaking at the Greg Mills meeting, which is really the George Lee seminar. I will be there, and Chris White. I'm not certain that Dev will be there. The meeting will be taking place on March 25th and 26th, and then again on Monday the 27th. This is not a sales. I have nothing to sell. George has nothing to sell, and everybody that comes probably already owns Chris White's program, so there's nothing you can really buy. It's really three traders showing people how they trade, and I will show you how I use HGSI and my other tools. George will show you what he does. And it's really designed to be affordable. It's at $350 to $450 for the 3 days of trading. It's at a Holiday Inn, so it's inexpensive for lodgings. It's really a great meeting. I've been doing this for years. It doesn't replace Ian. No one can replace Ian, not even Ron or I, although Ron's done a hell of a great job with his volume spread analysis. Greg Mills's email is GAM72054 at AOL.com. GAM72054 at AOL.com. If you are interested in attending, please don't email me because I'm not keeping track. Email Greg, and we'd love to see you there. On that note, you all have a great day. Happy trading. Let's just quickly take a look at where the futures are, and then we'll say goodnight. And I'm going to go find some antihistamines so I don't keep my wife up all night with my sniffling, snoring, and snorting. So here we are. You can see, frankly, the futures have all come off their lows. it's still early. I've learned a long time ago not to really pay that much attention to them at this hour unless they're really down a lot. Oil's down a tad, gold's up a tad, and that's about it. So you all have a great week. Hope to see some of you in Orange County. And on that note, I'm going to turn it off. Thanks, everybody. Bye.